Good morning, everyone, and welcome to our next session with Energy Fuels. I'm Joe Fars, Vice President here at Red Cloud. I'm joined by Vice President Curtis Moore, who will walk us through EFR's approach to becoming America's next big rare earth element producer. They've actually just kicked off commercial production for rare earths, not to mention the fact that Energy Fuels already has the operational readiness to be the largest uranium producer in the world. And really credit to that incredible White Mesa Mill, an operation that seems to be able to do it all. So with that, Chris, great to see you again. Or with that, Curtis, great to see you again. And please tell us your story.
Yeah, absolutely. Thanks again, Joe, and appreciate Red Cloud giving us the opportunity to talk about our story. One quick correction, we're not going to be the largest uranium producer in the world, but certainly in the United States. We've got a great story to tell. I mean, historically, we have been the largest producer of uranium in the United States, but I'm going to focus most of the presentation today on rare earths because we are quickly making pretty spectacular progress on rare earths. And as Joe said, really just in the span of about a year and a half, we've gone from really, babes in the woods in the rare earth industry to now we just launched actual commercial production of a rare earth product in the United States, which is a huge step forward. And I hope that people understand the magnitude of what we've accomplished and what this means for the company moving forward. So here on this first slide is our White Mesa Mill. This is where it's all happening. This is a facility down in Southeast Utah. It's a highly flexible facility. We've got a great team out there and we're really energized about this rare earth opportunity, while also keeping our industry-leading uranium option alive. Again, I'll be making some forward-looking statements today, so if you need to look at our disclosures, they're at the end of the presentation. So this slide shows our core business case. Again, uranium is our core business. We have been the largest producer of uranium in the United States since 2017. And of course, uranium is the fuel for carbon-free and emission-free nuclear energy. We have more assets, more production facilities, more capacity, low-cost capacity than anybody else in the United States. And we're just waiting for markets to come back for us to turn on our production and capture that. Rare earths, again, that's going to be the focus of my presentation today. Again, we successfully produced rare earths beginning in the first half of 2021, and we began deliveries to Europe and just last week actually. And it's small right now. It's a pretty nascent supply chain, but it's a massive step forward, and we're going to grow it from there. Vanadium is another mineral that we produce. When markets are strong, and actually markets are quite strong right now. Prices are up about 70% this year. We were the largest producer of vanadium in the United States in 2019. And, we're closely tracking markets to see what to do on that as prices continue to rise. We have a great recycling story. We recycle uranium and vanadium, saving the need for, saving carbon emissions and the need for mining. So I won't focus too much on that, but it is a nice aspect of our ESG story. And we've got good financial strength. We've got a strong balance sheet, zero debt, cash, securities, and inventory of about $85 million at the end of the last quarter. And that doesn't actually include the increase in commodity prices that we've seen this year in both uranium and vanadium. And as you can see, we have about 700,000 pounds of US produced uranium in inventory and almost 1.7 million pounds of vanadium. Okay, I'll start off talking a little bit about uranium. This map here shows our footprint. We're based in Denver, Colorado, but our main production facility is the White Mesa Mill in Southeast Utah. It's the only conventional uranium mill in the United States. It's also the only conventional vanadium processing facility, and this is where we're doing rare earths. We also have two ISR projects that are currently on standby, Nichols Ranch up in Wyoming and Alta Mesa down in Texas. And we have a number, the circles are a number of conventional mines that would feed the White Mesa Mill as markets improve. This slide just shows our primary uranium production assets. You can see the mill there. Those are our two ISR facilities. And we've also got our Pinyon Plain conventional mine, which is really the lowest cost uranium mine in the US today. And as you can see, these are fully permitted, they're fully licensed, they're fully developed. They're just on standby. We're maintaining them, waiting for markets to rise. So it's not going to take a lot of capital for us to get back into uranium production. This slide here shows who the main uranium producers are in the United States. This that shows the assets of companies and what their production has been over the last 15 years. Cameco, of course, is number one. They're kind of the big dog in the Western world as it comes to uranium production, but we're number two. You can see since 2006, our assets have produced about 16 million pounds of uranium. Energy, they have a good project up in Wyoming. Then you've got Uranium One, which is the Russian state-owned enterprise. They produced up in Wyoming as well. Really, these four companies are the main uranium producers in the United States. So if you're invested in uranium, it is advisable, I think, to look at companies that actually have a track record of successful production. They've actually made deliveries. They've actually produced uranium, and these are the ones that I think will really benefit from improving prices. Okay. This is the uranium space. Again, won't dwell too much on this. I don't actually think Energy Fuels has any peers, just because we have, so many elements that we're able to produce. But you can see we're kind of middle of the pack there. But we think there's a lot of upside here. Okay, rare earths. So we got into the rare earth business about 1.5 years ago. This is highly complementary to our uranium business. And the bottom line is that kind of that second bullet point in blue is that some of the highest value rare earth bearing minerals in the world also contain uranium and other naturally radioactive elements like thorium. And you need special licenses and capabilities to process those minerals. And the mineral that we're focused on is called monazite. Monazite is widely recognized as one of the best rare earth bearing minerals in the world. I'll talk a little bit more about that because it has high concentrations of the magnetic rare earths, the neodymium, the praseodymium, the NdPr, also the terbium and dysprosium. And our White Mesa Mill, as it turns out, is really the only existing facility that we're aware of outside of China that's able to process monazite for the recovery of both rare earths and uranium. For most people, uranium and thorium is a problem. We're kind of the opposite. For us, the more uranium, almost the better, because we can recover it, we can sell it into the nuclear industry, and we can also produce a rare earth product. Kind of going up to the first bullet point there, we do plan to fully integrate rare earth production through separated oxides or metals and alloys in the next 2 or 3 years. But again, as an initial step, and we just began it this year, we're producing an intermediate rare earth product called a mixed rare earth carbonate, which is a product ready for the next step, separation. And I think people are underestimating the magnitude of what we've accomplished. This is an extremely important step toward restoring a U.S. Supply chain for rare earths. And we've had a number of people tell us that this is some of the best news in the U.S. rare earth industry in 10 plus years. And so I think people need to open their eyes to what we're accomplishing out here. Monazite, again, is widely recognized as being a very valuable rare earth mineral. And one of the advantages is that it's already produced at existing mines around the world. Energy Fuels is not looking to become a rare earth miner because monazite is already produced at heavy mineral sand operations in the United States, Australia, Brazil, Africa, and elsewhere, where the main target minerals at those operations are zirconium and titanium minerals, but they also recover monazite as a low-cost byproduct. And whenever you can produce something out of a byproduct, it's typically cheaper. Monazite sand is very high grade. It's about 53 to 55% total rare earth oxides. It's about 0.2 to 0.3% uranium, at least monazite that we're getting from the Southeast US. Some monazite from Australia is over 60%. Monazite has superior distributions of the NdPr. And if you can see that bottom bullet there, for comparison, typical US bastnasite, which is another main rare earth mineral, it contains about 30% less NdPr and about 95% less heavy rare earths, including dysprosium and terbium. So this is a picture of the White Mesa Mill. And really what we're doing is that we're unlocking the value of monazite. Again, it's been considered to be a bit of a problem because of the uranium and thorium. Well, we're solving that problem because we have the existing licenses and capabilities to recover rare earths from monazite. We've actually gotten to our current point with very little capital. We spent less than $2 million. It's highly scalable. We have the capacity to actually process 720,000 tons of ore per year. And we're currently processing 2,500 tons. Long-term, we'd like to get to 15,000 tons of monazite per year. But again, this is just a very small part of our capacity. And very little waste is generated. So that's another big advantage. So this is what we've been able to accomplish. In the short term, we have launched a U.S. European supply chain for rare earths. We're initially purchasing about 2,500 tons of monazite per year, currently being produced at existing heavy mineral sand operations owned by the Chemours Company in Georgia. Chemours is a spinoff of DuPont, and they have several operations in the Southeast U.S. We're processing this monazite sand and producing a mixed rare earth carbonate at our existing White Mesa mill, and we're began deliveries to an existing separation facility in Europe owned by Neo Performance Materials, a Canadian company actually. Long term though, we plan to build out a full US centric supply chain for rare earths. We plan to fully integrate rare earth separation and value added capabilities. This is how you really get to capture the full value of the rare earth supply chain. I won't go into this too much, but we have hired Carister to do a scoping study for us on using SX technology to produce rare earths. But I think it's important to note that we've actually used SX to recover uranium and vanadium for 40 years at the White Mesa Mill. So we have a lot of experience in this. And those pictures over there is sort of our initial, it is our initial shipment of carbonate that just got sent out last week. This just visually shows what I showed in the previous slide there. So this is, we've had a lot of, people asking us, kind of, and I think there's a little skepticism out there about, what we're doing and if we're able to accomplish it. So I actually just put this slide together yesterday, very wordy, so I apologize for that. However, it just shows all the inherent advantages that we think we have in the rare earth industry and why we think we're going to be able to succeed. And in that yellow box, again, the #1 challenge to unlocking the value of monazite has been the radionuclides. Nobody wants to deal with those. Nobody has the licenses or the capabilities to do it. It's been generally considered to be a liability in rare earths. We're actually turning that liability into an asset. We already have those licenses. We already have those capabilities. As I said, the more uranium for us, up to a point, the better. And so again, we are just, creating a major solution to this problem of unlocking monazite. Again, #1, it just goes to that point. We have the licenses and capabilities. Again, monazite is higher value than other rare earth bearing minerals, 30% higher in NdPr, 95% higher in heavies. Monazite is already mined around the world. We don't need to go open a new mine. We don't have to go license and permit and finance a new mine. Monazite processing is a relatively straightforward process, certainly compared to bastnasite. I'm not a processing guy, but bastnasite has lots of fluorides that have to be dealt with, and it makes producing separated oxides more difficult and more expensive. It's very capital efficient. We're using existing facilities, which saves considerable time and money. We've used solvent extraction technology for 40 plus years, and we think it's relatively easy to pivot and apply that know-how to rare earths. We're not trying to deploy some new technology. We're not reinventing the wheel. Using SX to separate monazite is a well understood process. They did it in France many years. China does it. Lynas does it down in Australia. This is not something new. Utah, low cost, supportive jurisdiction. And again, some of the main other rare earth guys out there like MP Materials and Lynas, they operate in Australia and California, which are a little bit more difficult jurisdictions. And again, our team includes some of the most recognized global experts. So I'd say if there's one slide to focus on, it would be this one. I won't go through this one. This just shows all the accomplishments we've made just over 12 months. This is our market position in rare earths. Again, I think we've got a lot of room to grow, and we intend to be in the realm of the MPs, the Lynases, the Alukas. Vanadium, I'll quickly go through this. We were the #1 producer of vanadium in 2019, and we produce it in response to markets. Again, vanadium is used in steel, high-strength alloys, aerospace, chemicals, and some emerging grid-scale batteries. We have about 1.7 million pounds in inventory, and we have the capacity to produce another 1.5 to 3 million pounds in the very short term if we decide to do so. And again, vanadium prices are up nearly 75% this year. We do uranium recycling. This is sort of a misunderstood aspect of our business, but I do like the kind of in the middle there. There's a bullet point that says that we've recycled enough uranium to produce as much electricity as the coal in a train that extended from Los Angeles to New York City and almost all the way back again. This is a true ESG attribute that we have that I don't think it's recognized. We did just publish our sustainability report in December of 2020. We're updating it again right now. I encourage you to look at it. It's on our website. It's a great document, but it just shows all the various ways that we contribute to sustainability, environmental protection, human rights. We've got a really nice story to tell. We make some real tangible benefits in that regard. Talking about our balance sheet and financial strength, again, we have about $84.8 million of cash, securities, and inventory at the end of March 2021. But if you look at our inventory, we carry our U3O8 and vanadium inventory on the books at prices that are considerably lower than today's commodity prices. So if you add it all up, we probably have close to $100 million of cash, securities, and inventory right now. And I think that that's important to consider. Market position, you can see where we sit there. We have good volume and zero debt. So this slide here, just just a summary of what we offer. Leading U.S. uranium producer. We're quickly emerging as a leading U.S. rare earth producer. We produce vanadium when markets are strong. We've got a great recycling story, and we have the balance sheet to make it happen. So thank you very much for your time, and I'm happy to answer any of your questions.
Perfect. Thanks, Curtis. Really appreciate that. Great presentation. I just want to get into a couple of questions here. There's been some skepticism in achieving some of the goals. We just want to get a sense of, what the type of pushback you're facing now and your response and why and how EFR can actually achieve their goals of becoming, such a significant rare earth producer.
Yeah, definitely. And you're right. I mean, we sort of popped up out of nowhere on rare earths. I mean, we were well known as a uranium miner. However, again, about a year and a half ago, people started reaching out to us and inquiring about our rare earth capabilities. So, we were happy to look at it. So we started looking at it. We started, messing around in the lab with this monazite, and it turns out that it was not that difficult for us to process this. And so there is skepticism. I think mainly probably because it's just, we haven't been running around talking about it for many years. But our response to that is just to keep knocking down milestones, which we've been doing. And again, I go back to this slide that shows just why we think that we have all these inherent advantages over others in the rare earth sector. Again, monazite is a great mineral, and we can process it. Getting down through separation shouldn't be a big issue for us. We're already separating in our lab out at the mill. And we've hired Carrister, leading expert in separation. We intend to get down through metals and alloys at least. We're doing some collaborations with a national laboratory in the United States. So we think this is all very achievable, and there's no roadblocks ahead.
That's great. Perfect. Just on monazite itself, if you're looking for the ideal monazite feed for the White Mesa mill, what does that look like? Even if you're, giving a parallel to a specific asset or just the ideal type of asset, what does that look like for EFR?
Yeah, so we're focused right now on monazite sand, and I don't know if you're still seeing these slides. I'm kind of flipping through back
we
some
are.
of my slides. So, and so this is the what we're getting from Georgia right now from Chemours, and this is pretty good stuff. 53 to 55% total rare earth oxides. It's basically a concentrated or beneficiated monazite. And that's, we're focused on that. There is some of this monazite from Australia that's being concentrated at over 60% total rare earths. We can certainly handle lower grade material, and there is lower grade material produced by the likes of like Rio Tinto in Africa. And so, yeah, I mean, there's really no limitations as far as we can tell. It just depends on what price are we going to pay for it. And that's what's, we're not going to mine monazite. We're not going to become heavy mineral sand operators. There's lots of monazite already produced around the world. It's all going to China. China basically hung a open for business sign and said, bring us your monazite. That's what we're doing. We're sort of copying China on a smaller scale. I mean, we're never going to knock China down off their pedestal. They're probably always going to be the leader in rare earths. However, we're doing what China's doing. We're going to buy your monazite. We're not going to incur any mining risk or, permitting timelines or anything like that. We'll offer, attractive terms for that monazite, and we'll process it. We'll recover the uranium, send it into our nuclear industry, just like China's doing. China's recovering the thorium. Then we produce a rare earth. So, I mean, that's we're not reinventing the wheel here.
Perfect. Yeah. One last question here, more so on the long-term focus. You had mentioned a more U.S.-centric supply chain that you're looking to establish. Do you foresee premiums associated with the rare earths that you're going to be producing? Thinking, just mentioning China, it's very black box in nature in terms of some of the pricing that they achieve. Just your comments and thoughts on that in terms of what the ESG implications would be for having a U.S. centric rare earth supply chain.
Yeah, I mean, the current rare earth supply chains are a black box. And even if you read some of the trade publications, you'll hear things about, militia-owned mines, a black market for rare earths. Those supply chains are not exactly, very attractive. And if you're an end user, you're making electric vehicles or you're making renewable energy technologies, and you're reliant on a supply chain that has some questionable aspects to it, let's say, I think that poses a risk. You don't want some expose coming out in the nightly news talking about, oh, that Tesla you're driving right now is reliant on slave labor in Africa or something like that. Again, that's an exaggeration, of course, but still,
Sure.
I think that's a risk. Now, our company is willing to pay a premium for a supply chain that's basically based in the U.S. and you can track it every step of the way and make sure that all aspects of it are responsibly produced. I don't know. I would like to think so because I do think that there is financial risk to companies about being reliant on some questionable supply chains.
Yeah, absolutely agreed. Agreed. Well, appreciate that, Curtis. Thanks again for your time. And on behalf of Red Cloud, we'd like to thank EFR for presenting here today.